Hi student, Assalamu alaikum. Welcome to AR Accounting. Today we are going to solve question number 2 of May-June 25 paper 2-1. This question is about calculating the depreciation, preparing a disposal of motor vehicle account, and then an account of rental income. Let's start our question. Mo is a farmer. He prepares his financial statements to 31 December each year. Students, in the start of the question, most of the questions of accounting, you are given with a date that when the financial year of this business ends. Okay, this date is very important for solving the questions. So please underline or highlight the date when you are reading the question, because it will help you in doing the many calculations. Okay, he delivers his farm produce to his customers in his delivery vehicle. More charges depreciation on vehicles at 20% per annum using the reducing balance method. He charges a full year's depreciation in the year of purchase and no depreciation in the year of disposal. Students, this paragraph uh, actually represent depreciation policy. Okay, remember that it shows depreciation policy of the business. What is the depreciation policy? Depreciation policy states that which method will be used. Here, reducing balance method will be used to calculate the depreciation. Its rate of depreciation here it is 20%, and the policy about that when to charge depreciation and when not to charge the depreciation. Here they are saying he charges a full year depreciation in the year of purchase, means when you are purchasing the asset in that year, you will calculate the depreciation for the whole year, even you have bought the asset in the mid of or anywhere during the year. Okay, and no depreciation in the year of disposal, means that if you are selling off your asset in some year, in that year you will not calculate the depreciation. Okay, this was about depreciation policy. On 31st March 2024, he sold his delivery vehicle for 2900. What he has done, he has sold on this date. On this date, he has sold his delivery vehicle for 29,000. This is selling price. Note it down that it is selling price, it is not the cost of the asset. And received payment by check. Important that how, what is the mode of payment. He had purchased this delivery vehicle in June 2021 for 10,000. Now this is about the cost of the asset and its purchasing date. Okay, in June 2021 he had bought this asset for 10,000. So this is the cost of the asset. Cost of asset. What is cost of asset? The price at which we have bought that asset in the start, this is called cost of the asset, but the price at which we are selling that asset, it is not cost, it is selling price of that asset. This difference should be very much clear to you while solving depreciation questions. Okay, now we move to the requirements of the first part. They are asking to calculate the accumulated depreciation on the delivery vehicle which Mo sold on this date. We have to find accumulated depreciation. We have to calculate accumulated depreciation. Accumulated means total. Total depreciation of the vehicle that we are going to sell now. Okay, now as we have bought this asset in June 2021, so when they ask you to find the accumulated depreciation, start calculating depreciation from the year of purchase. Okay, from the year of purchase. So the year of purchase was 2021. In that year we are going to calculate the depreciation. See how we will calculate in the first year. In the first year depreciation will be 20% of cost. 20% of cost, it is coming 2000. Then what will be the net book value? Why we are calculating net book value? Because of the method. When reducing balance method is given, then net book value, calculating net book value each year is compulsory, so that we can calculate depreciation in the next year on that net book value. Only in the first year it is calculated on the cost, and from the second year onward it is calculated on the net book value. You can see in the first year 20% is taken of 10,000. What was 10,000? It was cost. But from the second year, story changes. We got net book value. You should know how to calculate the net book value. Net book value is cost minus accumulated depreciation. So we subtracted 2000. What was 2000? From here it is coming the depreciation of the current year. 10,000 minus 2000. First year net book value is 8,000. In 2022, depreciation will be 8,000 into 20%. Now we are applying 20% on net book value. This 8,000 is now net book value. No more calculation on cost, because the method is reducing balance method. Okay, it's coming 1600. 20% of 8,000 is coming 1600. Then net book value in 2022 will be 8,000 minus 1600. 8,000 minus means the net book value at the start of the year minus depreciation of the current year. It will give us the net book value in 2022. Now we move to 23 in the same way. 6400, that is the net book value. Now opening net book value multiply by 20%, 1280. It is the depreciation of third year. Now net book value in 23 will be 6400 minus this 6400 minus 1280, this value, it is 5120, $5,120. But here we have done only the calculation of depreciation and net book value for each separate year. Okay, but accumulated depreciation is left for one step. Total depreciation or accumulated depreciation will be 2000 plus 1600 plus 1280. From where these values are coming? These are the values coming from the depreciation of each year. 2000 first year, second year 1600, and third year 1280. Okay, now we will add these three values and we will have the accumulated depreciation 4880 till the date we are going to dispose this asset. Okay, now you can ask, sir, 24's 2024's depreciation has not been calculated. Why? Okay, because we are selling asset in 2024. You can see here on 31st March 2024 our asset is being sold. So according to policy, you can see up, according to depreciation policy, no depreciation in the year of disposal. That's why we have not calculated for 2024. That's all for the part A. If you have understood, if you got explanation properly, clearly, then please subscribe the channel. And if you have any quick query about the question or the technique or any other feedback, positive feedback, so please let us know in the comment section. We will be very thankful for you for this effort. Okay, now we move to the part B of the question. Part B, they are asking prepare the disposal account for the sale of delivery vehicle. Okay, now why disposal account is prepared? Students, I tell you that what is disposal account. Actually the disposal account is a temporary account. Disposal account is a temporary account that is created when we dispose of or we sell off an asset, non-current asset. Okay, at that time disposal account is created, and then it gets finished automatically. When we solve this account, when we work in this account, it does not contain any balance at the end. This disposal account is created when an account is sold sold or disposed of for the sale of delivery vehicle on this date. Okay, now students, this disposal account is very easy, but students lose their marks just they do not, because they do not remember that on which side which entry will appear on which side. I will tell you that the first entry will be on the debit side. This is first entry, means disposal of vehicle will be debited against motor vehicle account. This entry's credit entry will be on the credit side of motor vehicle account and on the debit side of disposal account. Okay, now here you will the amount, which amount is to be written here, this will be the cost. Remember this rule that the amount of this entry will always be cost of the asset. Okay, neither its depreciation nor its selling price, only asset will be uh, moved here at its cost. This is entry number 1. What we have done, actually we have removed this asset from its asset account. Okay, we have removed this asset from its asset account by doing this. Now this motor vehicle of 10,000 has no more there in its account. Okay, it has been credited there and it has been shifted to disposal account. Now we will move this asset from here. Now this account has been depreciated for 4,880, means the total depreciation will be written on credit side. Accumulated depreciation account debits and disposal of that asset account gets credited. This is entry number 2 that you will do in disposal account. Remember, entry 1 on debit side, entry 2 on credit side, means when we don't have the asset in our books, now its depreciation is of no use in depreciation account, so we will take out its depreciation that our asset has been used of for $4,880. Okay, but a third entry is, that is bank cash or account receivable, means that for how much our asset has been sold. Our asset has been sold for 2,900 here. Okay, this is selling price. This is selling price of this asset. If it would have been sold for cash, then we would write here cash. If it would be on credit, then we would write over here the name of the person or the business to whom we have sold that asset. Okay, and selling price will come here. But these three entries are fixed. uh, First one on debit side and two on the credit side, they are fixed, they never change their place. After that, what you will do after doing these two entries, you will total the accounts. On debit side it is 10,000 and it is on credit side it is almost like 4,000 something 29. It is about 7,000 like. Okay, means debit side is larger, so we will write the debits total on both sides, 10,000 and 10,000. Okay, after that what we will do, we will subtract these two values from the total, as we used to do while balancing off or calculating a missing figure. But actually we are not balancing it off, we are finding the difference, that which side of this account is greater by how much on from than the other side. Okay, difference is coming 2,200, and we will label it with income statement or profit and loss account here. This means our credit side was short by 2,200 and we have written 2,200 over there, and in the details we will write income statement or profit and loss account. Okay, now sometime this difference can be on this side. If debit side would be short, we will write on the debit side income statement. There will be no balance carried down, no balance brought down. Balance CD and BD will not appear anywhere in disposal account. Remember this. Okay, sometimes students do this mistake that they close it against the balance CD but not income statement. But you have to take care that income statement will be coming for the difference figure. Okay, Now this figure 2200 is either profit or loss. Okay, means on selling this asset either we earn a profit or we incur a loss. How do we know that is it a profit or loss? If income statement is coming on the credit side, it means income statement is getting debit on and disposal account is credited. Okay, income statement is getting debit. When income statement gets debit, it means there is a loss. Okay, here this 2200 is a loss. If income statement would be appearing on this side, on the debit side, if our debit side is short in the disposal account, then it shows a profit. Okay, so that's all for this disposal account. Hope you got it clearly and in full details that there are total 4 entries. Okay, in this account, and out of these 4 entries, 3 entries have fixed place, but income statement entries place can be changed. Okay, depending upon which side is short. So this was the disposal account. It contained 4 marks, and you have to solve it in within 4 to 6 minutes. Okay, in your exam, you will have only 4 to 6 minutes for solving this disposal account. Okay, now we move to the next part of this question. It is about next part of the question asks to calculate the amount which Mo will record in his delivery vehicle account for this transaction on April 2024. What is the transaction? Mo purchased a new delivery vehicle on this date. The purchase price is made up as follows. Okay, uh, while he has purchased a vehicle, these expenses he has paid. This is the cost of vehicle. He has bought petrol for the vehicle, and then paid for the insurance 6 months, and paid 215 for number plates. Okay, now we see that how much is to be written in the account of delivery vehicle. Okay, only 12500 or some other values will also become the part of the the vehicle. Okay, now it is obvious that cost comes as because this is the buying price. It is compulsory, it is coming in the account. Okay, then petrol, it is a revenue expenditure. It will not go in the account. It is not the part of the cost. Insurance is also revenue expenditure because this expense will be incurred again and again. So revenue expenditures are not the part of the capital expenditure. Number plates, this is the legal cost. This is legal cost of buying the assets, and legal cost also become the cost of the asset. Okay, so legal cost is capital expenditure, capital expenditure. So only these two things will go in the account of delivery vehicle. Cost 12,500 and number plates 215. 12,715 will be the cost of delivery vehicle, and they will appear 12,715 will appear as the cost of delivery vehicle. Delivery vehicle account will be debited for 12,715. Okay, now we move to part E of this question, where we have to make a rental income account. Rental income account. Okay, first we see the details of the question. Mo owns his farmland and rents out one of his fields to a neighboring farmer, Barry. Okay, he rents out some of his fields to Barry for $80 a month. Barry pays Mo by bank transfer. Okay, on 1 January 2024, Barry owed Mo 2 months rent. Very important information. On this date, Barry owed to Mo means Barry has to give Mo 2 months rent on this date. It means this is the accrued rent that some rent of 2 months of previous months has not been paid. During the year ended 31 December 2024, Barry paid following amounts to Mo for rent. These payments has been made during the year. Uh, Now they are asking you to prepare Mo's rental income account for the year ended 31 January 2024. Total the account and bring down the balance at 1st January 2025. Students, you should remember that if our financial year is ending on 31st December 2024 and you are asked to make an account, then you should start that account on the start of this year if this account contains some balance. Okay, now this account contains balance means Mo has to receive $160 remaining arrears means accrued, okay, of the previous 2 months. How 160 came? 160 has not given. 160 not given in the data. You can see how we will calculate 2 months rent. We are given $80 per month. So 80 multiplied by 2 is equal to $160. 2 months rent, it is receivable, and you know receivable is our asset. It is written on the debit side. Okay, it's written if on the starting date the accrued income has some balance, it is written on the debit side because this is receivable, this appears as current asset. Okay, then we will write the payments, both of the payments. These two payments are done by Barry during the year 320 and 720. We will write their dates, okay, on which dates they are paid. Bank will be debited and rental income account will be credited for these two values. After that, we will also calculate that what is the annual rental income. Okay, because the annual rental income has to be shown in income statement. Students, please remember whether it is income account or expense account, you have to calculate the annual charge of income or the expense, okay, at the year end. Here we are given $80 a month and 12 months will be 80 multiplied by 12. So it will be 960. We will write this 960 on the debit side. Remember, income statement always appear on debit side of any income account. All income accounts contain income statements entry on the debit side. And if it would be an expense account, then income statement would appear on the credit side. This is to remember. Okay, after writing 960, now we balance off this account. Here we have two amounts on the debit side and two on the credit side, 160 960, here 320 720, and we can see the debit side is larger, so we will take their total and it is coming, we will add these two and it is coming 1120. 1120 will be written on both sides. Okay, it is written on debit side and on credit side. Then from this 1120 we will subtract these two values on the credit side, they will be subtracted and we find the difference of $80. It will become the closing balance of rental income account, $80, and it will appear on the 1st January 2025 on the debit side as opening balance of $80. This question is of 4 marks. Okay, here you have to remember when we have an income account, payments come always, payments that we have received, receivings, we can say receivings, receivings appear on credit side of the income account. Okay, and income statement on the debit side. This closing balance can come on any side. Okay, it depends that at the year end income was accrued or prepaid. Now again $80 are accrued, $80 are again receivable, that is appearing on the debit side of next year, on the first day of next year. I hope student you got this rental income account very clearly. If this is so, please subscribe the channel and press the bell icon so that you can get all the past papers solutions and their explanations in the coming videos. Thank you so much.